is RMI. RMI, that broadly stands for Rand Merchant Insurance or Rand Merchant Investments. It's a holding company that emerged from the reorganization of the First Rand Group, where Remgro, the controlling shareholder, agreed to swap it out so that they could separate First Rand's banking operations from insurance operations. This is the insurance bit, and it has sizable chunks in Momentum, or nowadays, of course, Momentum Metropolitan is MMI itself listed. It's got a big chunk of Discovery as well, so that's very exciting. But then it owns 95%, I think it is, of OUTsurance, which of course is a market leader in the direct selling environment. There's some other things that RMI has in there as well. 59.6 billion rands worth of market capitalization, price earnings ratio 20.19, dividend yield of 2.92%. So it's extremely fortuitous to have those brilliant assets, you know, in the portfolio.
Yes, so this counter, which recently changed their name from Rand Merchant Insurance Holdings to Rand Merchant Investment Holdings with a broadening strategy, is a really nice counter to own because it really gives you exposure to OUTsurance, which you can't get anywhere else. And then you get some, as you said, MMI and Discovery in the mix.
Which is true, you can buy yourself direct, but it does sort of add to the mix. And the free cash flow from those underlying entities are being used to do some of the new things, which is to seed asset managers, to get into fintech. I mean, the CEO, Herman Bosman, is a very smart guy, ex-RMB banker, ex-Deutsche Bank guy. He's keen to use this as the vehicle to do some pretty exciting things in the industry.
Yes, so you've got this optionality, let's call it, or some upside, blue sky upside in those fintech and those asset management ventures. They're pretty small by virtue of the market cap in comparison, but nevertheless they're there, quite exciting. So you really get a nice mix in this counter.
Okay, as far as this conversation is concerned though, how is OUTsurance doing? I mean, they're very visible, the pointsmen are fantastic, everybody knows the direct selling product, and they're expanding in Australia with that thing, I don't know if it's
UE it's called.
I was going to say, I get the name wrong, so I'm glad you told me. Are they continuing to do particularly well? I mean, what are those numbers year on year?
Extremely well. So the franchise in South Africa is very strong, the OUTsurance franchise, very strong direct personal lines, going into commercial, smaller commercial risks and life insurance, so that's the quick story there. High penetration, so the growth I think is going to come out of Australia. Last year they had a bad underwriting result in Australia, this year much improved. So they actually, OUTsurance was the star in the last set of results. Disappointing from Discovery, which we'll talk about just now, and MMI. So OUTsurance, was the star. So you get UE in Australia and now New Zealand, and you get the OUTsurance business
and potentially that could be big, because Australia is a big market with a lot of rich people, but it's probably fairly under-penetrated in terms of this kind of model. Okay, graph, share chart, let's have a look at that. Looks pretty good. And, you know, they're not the only stock to have drifted sideways a little bit in the last year. As we were saying earlier, when we were talking about our portfolio, that's inevitable. That's what they all look like. Hot or not? Do you like this one?
Yes, I like this one.
I like this one too. Good. Hot on that.